Hi guys, welcome to my weekly market update. This is for Tuesday the 11th of November 2008. This is obviously the first time I've done it, so basically what I'm going to cover is the things that have been going on in the week. So I'm looking at various news articles that I have on websites and been saving, and then I'll give you my view on what I think they actually mean and how they impact you as an investor. Okay, so let's get started then. This week what we're going to cover two aspects, UK news and then world news. Firstly, UK news, we're going to look at falling house prices at the record rate, okay, and an article about that. Prices down because of stock, not distressed sales, okay, and that's a really important one. We'll explain that. How your property, or how much has your property dropped in value, and looking at Phil Spencer's comments about he's predicting a bounce back, or one hell of a bounce back in his words. The other thing is we'll talk about the 1.5% rate drop and the fact that LIBOR is down to 4.49 or thereabouts. And then we'll look at how you can read about LIBOR, because LIBOR is one of those important things, probably more important in today's credit crunch times than actual base rate, but we'll talk more about that soon. And then we'll look in world news, we'll look at the Dubai property downturn and what's happening there, and Obama mania. You know, will US prices turn around now that Obama's coming in? Alright, so let's get started. Okay, so the first article is from The Independent, and I'll just highlight it there, the point that I want to make. House prices falling at a record rate. The annual rate at which house prices are falling continued to accelerate in September to a new record of 5.1%. So that's in 1 month, 5% drop in September, apparently. Now, government figures, so that's generally land registry, okay? The four left, average house price costing $208,000, nearly $12,000 less than 1 year, and the lowest level since March 2007. Now the interesting thing is, depending on which indice you believe, whether it be nationwide, HBOS, land registry, or any number of people, you're going to get a different average, you're going to get a different rate of fall. You know, there's a whole range of things, and you've got to be very aware that this creates news. And news, at the end of the day, you know, the Independent's in the business of news. So they're going to take the indices from one, or the results from one week, and then the results from another to make a news story. What you've got to look at is what's happening in your specific area. Okay, so that's a really important point there, and you can go on to read that article. It actually is quite a positive article. It's saying that we're getting near the end, and that it can bounce back. But here, and this is another one from Property News, or aboutproperty.co.uk. Glimmer of hope in the property market, and the important thing here that it mentions. The main factor found in the depressing house prices was the large stock of unsold properties and limited number of buyers. Okay, supply, demand. All right, massive supply, lacking demand, prices are going to drop. Okay, and it's not, and this is what this is saying, is not due to the surge in distressed selling. Okay, as a high number of recession-fueled repossessions have yet to feed into the economy. We've got very low levels of repossessions in this country. US, different story. In the UK, actually, we're still very strong. Okay, so most of the things that we're seeing is stock that people have to sell, and especially we're seeing that with developers. You know, where I've seen stuff up to 56% discounts. You know, that's massive. Now, depending on if they're offering 56%, they're either pretty desperate, or maybe it's off a little bit of an inflated valuation. It depends. But somewhere between sort of 20 and 30% is where most of the stuff's coming out. Certainly the quality stock is, you're getting that below value. So massive. Now, if you're wondering where your price, or your house price, or your property price is at, I recommend going to the BBC. So news.bbc.co.uk, and you'll be able to find UK house prices. So what I've done, I've typed in my postcode, which happens to be in Islington, which is also where the office is. You can see the average price of the various things. So you can see this year, or in the last year, it's dropped 4.5%. Okay, but if you have a look at this, you can actually scroll down and you can see what all the places have done. So each individual place, so we can say prices have dropped 15% in the last year, but the question is not prices. I mean, that's prices generally, but what's yours actually done? And you may find that prices have dropped exactly what the indice says, but in most cases, you might find, Hammersmith and Fulham, 0.5% growth. You've got Lambeth, 7% growth, but then you've got, if you have a look, Newham, 11.7, Sutton 11.3. So you've really got to look at these things and take all these news articles with a grain of salt. I always say, read beyond the headline. So if you look at the headline, you might go, well, but actually look beyond that. Look to the next step and actually read what's in the thing. Because what you'll often find is you'll have the newsy headline, and then when you read it, you'll realise that that was to get you in, and now here's the justification or the explanation of that. Okay. Property market will bounce back strongly. Okay, Phil Spencer, location, has said, and basically here's the thing that it says, however, once we have seen the bottom of the market and we have money and we all feel more confident about it, there'll be one hell of a bounce back at the end of this. And I actually totally agree with this. I think when you look at the supply and demand issues, I think when you look, generally we do have a strong economy. As much as, we can look at it and think things are actually quite bad, realistically, if we're honest, unemployment hasn't jumped, out of control yet. Sure, I think over the next year unemployment is going to grow, but I think we're in a really strong position, and I think we will bounce back. As always, good solid fundamentals, shops, schools, transport links, major employers, major investment in the area, and as long as you've got that, they're the properties that will bounce back. Okay. So next one, banks cut mortgage rates. Now the important thing here is we've all been blindsided a bit by the 1.5% drop in base rate. Realistically, for most people, that's not actually the determining factor. The big thing, and it mentions it here, Halifax said the reduction will apply across its range from December 1st, and Royal Bank of Scotland said it would pass on the lowering in accordance not only with the Bank of England's decision, which is base rate, but also the recent fall in interbank lending rates, which is the LIBOR. Okay. Now, if you want to read about the LIBOR is simply the rate that banks lend to each other. And that's been traditionally high because they haven't trusted each other because of all the bad debts and the mortgage debts, and that's what's caused the credit crunch. That LIBOR has actually come down considerable amounts. Okay. Now, if we go here, the bba.org.uk, that website, it's actually the British Bankers Association. Okay, and they're the ones that effectively run LIBOR. And if you click on the LIBOR link, you'll get to see all the bits and pieces. Here you've got, taking the mystery out of LIBOR, understanding the BBA LIBOR. Okay, it's a good thing to read and to understand because that's actually the rate that determines what mortgage products they're going to lend you. So if you're looking at buying property, this is the one that you consider. If you've got a tracker, then base rate tracker, then that's the one you need to consider. Okay. All right. Now this is basically Reuters. Dubai accesses 200 jobs. Now, it's only 2.5% of their workforce, so it's not a massive drop, but it is quite a quite a drop. Quite simply because they have been such a large, or there's been so much growth over the last year. That's coming to the end now. Obviously, less people, less money, credit crunch, more people worried about recession at home and those sort of things. Dubai is based on foreign money coming in, to buy these houses and to let them out and things like that. That's slowing down. So Darmak's announcement is the first public admission from a Dubai company that the Emirates' thriving real estate sector may have hit its peak. I hate to say I spent my honeymoon in 2 weeks ago in Dubai. I loved it, but I can also see that there are a hell of a lot of properties that realistically somebody has to let out. And I think, my money's not on Dubai. I think it's a small country. Sure, it's an Arab country, and all that sort of stuff. But to be fair, I think they're in for a downturn. So, my money's not on Dubai. I'd be waiting a year, 2 years, and just see what happens. I think they'll be in for a bit of a fall. But anyway, that's my prediction. So finally, optimism over property expressed after Obama win. Well, the word on everyone's lips is the election over there. Traditionally, what happens? A new election, everyone will hold off and things will slow down before an election. Now they've got some certainty about who's actually going to be the president over there. This could actually mean that things stabilise. It says here, realtors believe that if the economy starts to stabilise, buyers will jump back in, and that's what they really need. It's what the US needs. It's what the world needs. So that'll be good news. That happening. All right. Well, guys, thank you very much. So yeah, thanks for listening, and I'll finish up there, and we'll see you next week.